This is episode 4, where we will talk about looking at a portfolio company, multiple levers that you're pulling on to create that growth. Cabs, do you remember doing your first private equity deal?
Sorry.
I'm going to take you way back
Yeah.
to your first deal,
Yeah.
right? And I'm going to ask you, what do you wish that you had known then that you know now?
How long do you have? What I wish I knew is, I think the first thing is the behavior or the position of the seller, right? In the sense that you do have different types of sellers. You have sellers that are looking for genuine growth, capital, good partners that want you to come into their business. You have sellers that are looking for, and this is where you have an exit, I guess. Where the seller is exiting. You have sellers that are looking for liquidity and want to maximize liquidity, which is probably the nature of private equity. And I think that then drives the behavior of the seller, right? So in the second example, you need to have, I'd say, bigger binoculars in the sense that, and approach the transaction with a high level of skepticism, and try and look for things that the seller might not disclose to you, because especially where they're exiting 100%, right? So to ensure that your transaction is protected in terms of warranties and indemnities, and that you're paying the right price, right? I remember from the first transaction that I did, there was an issue around the seller didn't want us to have access to management, and that's already a red flag in itself, right? So we had to insist on it. But even doing that, they'd want to be in the room. You don't know what has been discussed before. Eventually, I think we got around it by effectively just saying, if we don't have access to management without you in the room, then it makes the deal difficult for us to do. I think that's more on the, I wouldn't say it's a soft part, but it's an important part, because it drives how your transaction goes going forward. Speaking about, when you enter the transaction, after that, what happens? What is the experience with management, with the previous shareholder? Where are they in their space? Are they going to treat you the same way as the previous shareholder? It takes time to change cultures, right? Then I think the second thing is just understanding different industries. I think you also you need to understand, what are the drivers of the businesses that you look to, well, that you invest in. I don't want to say much, but one of the things that the this particular company did was they looked at tenders in government, right? And I think we all know that from a private equity perspective, it's very difficult to invest in a business that looks at government tenders, because of the technical aspects in terms of generation of cash flow and the time it takes to then generate revenue, especially where tenders come out every 3 years. And this particular business was more in the infrastructure space. So also, just with the nature of infrastructure, it is a long-term play. So it's not a 5-year, 7-year investment horizon, right? So it's important to look at businesses that are niche, and look at the customer base and understand what drives that business. Especially from a growth perspective, you don't want to be too reliant on government work, because of the nature of that kind of aspect. It doesn't really generate you cash the way you would want it to, right? So you'd rely a lot on bank funding as well. So you want to give the business an opportunity to breathe. You want to generate cash and use that cash for growth, as opposed to borrowing and using it for growth, right? Yeah. Those are two of the biggest lessons, I think, that I learned from the first transaction that I did.
Yeah. No, I think it goes back to the theme around, culture and trust, and building that relationship of trust. I think having a solid relationship with the management team and having a transparent relationship So having access, I think that's absolutely critical.
Yeah.
Because you don't know, what you don't know. Where are the bodies buried? What's being hidden, what is not being disclosed. So I think, fundamentally it is a marriage. You're aligned, you're joined at the hip with your portfolio company. You're gonna grow together, you're gonna argue, but ultimately it's all in the best interest of creating that level of growth. So I couldn't agree with you more. I think having that interaction, that marriage, that union with your management team is fundamental. You need to sleep, breathe, eat your portfolio company.
Yeah.
Literally.
Absolutely.
Yeah. T, and to you, do you remember your first deal that you did, and what do you know now that you wish you had known back then?
It's honestly the same thing Tab said. You have to know the management team, and you have to almost do that due diligence on them. And I think that's why we don't like processes where it's just run by an advisor and you don't have that time to actually do a due diligence on the management team. So this was a transaction where we did 100%, actually. We bought 100% of the company. It was internationally owned and it required empowerment. And that's the reason for the exit, is because it was an international company and then they required empowerment in order to keep the contracts that they have, some of them being with a state-owned entity. So just around the government exposure as well. But the one thing that we learned, and it was after the fact, and it was such a painful lesson, was that this company was actually an order taker as opposed to a sales-driven business. It just took orders from the mother company, which was the international company. And the minute they were out of the picture, the business was not able to get new business because management didn't have that capability or the skill set to go out there and get new business because they were an order taker, right? And that's was a painful lesson because now we're sitting with a management team that is not able to execute in terms of what it's required to do as a business to go out there and get new business, right? And that was a painful lesson. We had to bring in a CEO, we had to bring in a CFO, very expensive resources to bring in just to turn the business around, literally change the entire management team because they were not fit for what they were expected to do around executing on the business strategy. So it's so important to understand if you have the right management team to execute the strategy of the business, because we're investors. We are not operational. We don't go in there every single day and drive the business, So we need to back the right management team. And it's so important to know that in the beginning. And just knowing in the beginning, if you know that, yes, it's not the right management team, it's okay to still buy the business, but at least have a plan to say, we've identified KB, who's going to come in as a CEO, and he's going to turn this business around. It's very hard to do that 2 years into it. And then, oh my goodness, we need a CEO for this business. So it's good to know from the beginning who is going to be the right person to drive the strategy of this business.
No, that's true. Yeah. I think some of the common themes or lessons learned from recent transactions that we've looked at as a deal team is that a lot of the businesses that you look at, they're good at what they do, but they don't have the support structures. They don't have the agreements, they don't have the resolutions, the shareholders agreements, etc. That speaks to governance, that speaks to the social element, looking after the communities and your stakeholders. So it's interesting for us. I think as practitioners, you've got multiple levers that you're pulling on to create that growth. You're not just an accountant, you're not just a lawyer, you're not just a CEO. You play multiple roles, and I think that's the distinguishing thing, and I think that's what sets us apart. I think as private equity practitioners, is that you are involved in the business. There's multiple levers that you're pulling. So every day, you've got a new role, you've got a new position or thing that you're trying to do or achieve. So I think on that note, I'm gonna ask Naira, when you're looking at a portfolio company, for me, things like resilience, strong management teams, being empathetic, other than, just the growth element come to mind. What are the sort of top 3 attributes that you see in a top performing entity?
I would say some sort of competitive advantage that almost creates a moat against other businesses, taking its leading space in the market. So it needs reasons why it is a leading player in the space that it operates. You mentioned also, a management or leadership culture. I think, if you're backing the right people, they will succeed in any environment. The economy can turn, they can be entrepreneurial and inventive enough to come up with solutions to survive all types of economic climates and events such as COVID that we've faced. I think the third is also just a cultural element for me, because ultimately a business is run by people and the employees and that actually are the force behind the business. So when I look at, leadership in a business, I want to see how it impacts the people that work there. Can they grow? If you have loyal and motivated staff that are encouraged to grow, you're just generally going to have a successful business. So yes, it is unfortunately the softer things. Yeah, it comes down to the people.
Perceived softer things.
Yeah,
I think.
perceived
They're
softer
very
things
real
that are
issues.
actually so critical.
Yeah, I think a lot of it is just socializing it into the business, right? So I think everyone is sort of driven by, results and, quarter on quarter performance. But I think the element that we bring in is around, you need to know that your CEO, is in a good space and, what the home environment is like. And, because it comes back to the performance of the business as well.
Yeah.
So you're absolutely right. We're in the business of people.
Yeah.
Kebs, and I'm going to ask you the same thing. Like when you look at a top performing company or portfolio entity, what are the top 3 things that you look out for other than the growth aspect, financial growth?
How did you know that was number 1?
You're a numbers guy. I know you.
No, I think I still go back to. I'm tempted to say you said other than the growth, so let me exclude the
Financial,
the technical
performance
stuff.
and-
Yeah, I still say management is important. I know it's repetitive, but I think it's the most important thing. Having the right jockey, the right aligned jockey, so to say, that has skin in the game. And then I think number 2 is also I think the culture as well. I'm repeating, but what Naira
It's a common
said, but
theme. That's what
but
it
it
is.
it is important
Yeah.
things, because those things can make or break a company, right? It is a people game, as we've said, and employees even on the ground are very important to adding value in that business. Number 3, I think the goal of management and where they want to take. I'm going back to the management aspect, but it's important to understand where management sits in terms of their own, goals and objectives. Because once again, if you get a transaction where someone takes money off the table, it's important to understand whether they're still vested in that business or not, or maybe they valued your stake as 100%. Maybe you're buying 20%, and for them 20% equates to 100% sale. They still have 80%, but for them they've taken off 100%, so they're not really fully vested in what happens in the business. So it's important to understand that alignment aspect of where does this your fellow shareholder or management sit in terms of their thought process around the future of that business. And I think you get that through just spending time with them, right? You might not do it 100% or understand it 100%, but I think it's important to understand where their headspace is. Yeah.
And I think, speaking of the management team, I think what's also important is the team aspect. in terms of how well does a team work together? How long have they been together? The asset itself, are they able to perform in good times and in bad times, right? So no, you're absolutely right. I think for me, it's teamwork. It's about resilience, being able to weather, the good and the bad, effectively.
That's
you
our
know,
investment thesis, isn't it, though?
Absolutely.
In terms of what we look for.
I'm reading
So-
it.
Yeah, you're reading
in my
it,
head,
exactly.
Yeah, I'm like, okay.
Ascension Capital Partners. We look
think,
at companies that enhance or enhance
Better.
a human need, exactly,
Yeah, exactly. Yeah.
and
absolutely.
underpinned by technology.
Yeah.
So Robin Sharma says that the best way to outwin your competitors is to not die. Basically, so companies that do better are the ones that can exist in any environment because they are enhancing a human need. And that's what we look for,
Yeah.
businesses that do that.
Yeah.
And it's so important that whenever we look at a business, we need to realize what need is this business trying to
Solve for.
solve for.
Yeah.
Exactly.
Yeah.
And if there isn't a need that it's solving for, then the business cannot exist forever. It cannot exist in any environment, in bad or good times.
Yeah.
So it is important when we look at businesses to realize that this business is solving a real problem, and that's what's going to make it outwin competitors.
No, very true. Yeah. Very true. I think I'm gonna switch it up a little bit. So I mean, the industry that we're in, there's multiple stakeholders and players, from the LPs to administrators to ESG specialists. How important do you see, from a fundraising perspective, how do you look at that relationship with your investors? What does that look like? I know it's a very broad question, but just trying to understand, what is that relationship about? It's not. I think what's clear is you're not taking capital from an investor, and you're saying, cheers, we'll see you in 10 years, and I'll give you a return. To you, T, what does that relationship look like, and how important is it to maintain that relationship with your investors?
Yeah. I think before, because we were very removed from the investors, it was very much controlled by the asset consultants. So we didn't have any relationship at all with the investors, and it was just about receiving capital and investing and reporting about the assets in which we're invested in. And now, with a lot of the engagements we have at conferences, we're actually starting to see and interact with the trustees behind the pension funds that we're investing in. And by seeing them and realizing that, like when you start looking at the investments that you're investing in, we start thinking about the investors. And we want to ensure that their lives are bettered too through the investments that we're investing in. So now we're thinking about, how do we invest in, the healthcare space that actually contributes to the economy in Pretoria, that actually will get more jobs there, because now we're thinking about the investor whose daughter is working at Steve Biko. So it makes it more, we're more conscious now about the opportunities that we're looking at. And the relationship is that the money that we're getting needs to enhance or better the investor's life in some way. We need to better their lives. And now we're thinking about our investees as in human beings and how we can better their lives through the investment companies that we're investing in.
No, I mean, I think it's very real. It's very authentic, so back to the point that, you're not deploying capital, sitting back and waiting for your money to grow. I always say, we all have pension funds. We shouldn't have to wait until you retire to get some sort of a benefit out of it. We've got families, we've got, grandparents, we've got children. So yes, I think it motivates us to also look at things from that angle of, education and schools and healthcare and where hospitals are in need, you know, and how do we contribute to that story, that narrative? Yeah. All right, awesome. Thank you, everyone, all of our stakeholders, all of our partners, the team around. We'd like to just give a big thanks for your time, and we look forward to the next session and next podcast with us. Keep well.